Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar is filled with Black Star events that you don't want to miss. At 2 p.m. South African Standard Time, the British interest rate decision will be released, followed by the unemployment claims report at 2:30 South African Standard Time. These reports have the potential to create fantastic trading opportunities, so don't relax just yet. But that's not all. We're giving away a limited edition branded mug. All you have to do is like this video and answer the following question in the comments. Fundamental analysis in trading looks at what? A. Charts and indicators. B. Economic and political factors. Or C. Psychological factors. Make sure you subscribe to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers. T's and C's apply.
Let's move on by having a look at what's making headlines within the financial markets today.
Let's dive into currency news. The dollar tumbled to a near 7-week low after the Federal Reserve hiked interest rates as expected. However, some language in the central bank's announcement suggested that interest rates may be close to reaching their peak. The Fed hiked rates by 25 basis points to 5%, within market expectations. But a change in the bank's language signaled a potential policy shift, which could see the bank hit its terminal rate sooner than expected. Looking at the analysis for today on Euro USD, after yesterday's massive rally, we could expect one of two scenarios to play out. We're currently hovering just below that primary resistance level at 1.09. We could see a potential correction back down to those lower levels at 1.08. However, should this resistance level be broken and we get a close around that 1.093 level, this specific currency pair could rally all the way back up to that next primary resistance level at 1.1. Moving on to Wall Street. Indices closed lower during the regular hours as market participants reacted to the Federal Reserve's widely expected 25 basis point hike, with Powell hinting at less aggressive moves looking forward as inflation pressure begins to ease. At the close in New York City, the Dow Jones Industrial Average lost 1.63%, while the S&P 500 declined 1.65% and the Nasdaq declined 1.6%. Let's shift our focus to Nasdaq 100's analysis. US Tech is currently hovering just below that primary resistance level at 12,700. Should we remain below this level and get a close around that 12,550 level, we could see this specific index fall all the way back down to those previous lows at 12,200. However, should we break above the resistance level and get a close around that 12,800 level, we could see a rally all the way back up to that next resistance at 13,200. Moving on to commodities. Oil prices rose about 2% to a 1-week high as the dollar slid to a 6-week low after the US Federal Reserve delivered an expected small hike, while hinting that it was on the verge of pausing future increases. Brent crude rose 1.8% to settle at $76.69 a barrel, while WTI crude ended up 1.8% higher at $70.90 a barrel. Looking at our analysis on crude oil, we are currently hovering just above that dynamic support level at $70 a barrel. Should we get a close around that $70.30 a barrel level, we could see this specific commodity rally all the way back up to retest that primary resistance at $72 a barrel during today's trade. Finally, gold prices rose, hovering below that key $2,000 level amid expectations that the Federal Reserve will have limited headroom to hike interest rates further, which also pulled the dollar lower. The Fed's refrain that US inflation is too high has seldom caused more than a passing interest in the gold market over the past year, despite the yellow metal being labeled as a hedge against price pressure. Yesterday, though, it became the call for a rally, returning gold to the high 1900s after snapping 2 days of losses as Fed Chair Jerome Powell's view of inflation as the common public enemy of Americans brought safe haven seekers back to the precious metal. Taking a look at our analysis on gold, we are currently just below that smaller resistance level at 1,983. Should this resistance level be broken, we can see this specific commodity rally all the way back up to that next primary resistance at 2020. However, should this smaller resistance be respected, we could see it go back down to those lower levels at 1960 to retest before continuing on its bullish momentum.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.